In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, 5 important words. Tesla says it will be sustainably profitable and cash flow positive by the end of the year, and sets yet a higher target for the Model 3, aiming to make 6,000 cars a week by the end of the month. Still, the company managed to burn through $740 million last quarter. We will have reaction and analysis for the hour. Plus, Elon Musk speaks out. We're going to hear from Tesla CEO on the earnings call. Will he push back on analysts questioning his execution? And T-Mobile reports its best second quarter ever as the company and Sprint push to close their merger. We'll speak to T-Mobile COO Mike Sievert. But first, to our top story. Tesla shares surging in late trading after second quarter results missed analyst estimates, but revenue beat expectations. The electric car maker burned through $740 million in the period, but that was less than the $900 million analysts had predicted. And CEO Elon Musk is setting himself more targets, now saying the goal is to produce 6,000 Model 3s a week by the end of this month. So maybe that tent, remember the tent outside the factory? Maybe it's doing the trick. For more, I want to bring in Ivan Feinseth of Tigris Financial Partners and Bloomberg Businessweek's Max Chafkin, both from New York. So, Max, I'll start with you. The headline here seems to be these words about sustainable profitability and cash flow positive. But is it possible?
Yeah, absolutely. I mean, the big question on profitability is when are they going to start making investments in these future products? You know, Elon Musk has talked about an SUV, a smaller SUV than the Model X. He's also talked about a pickup truck, a semi, a Chinese factory. All of those things are going to cost huge amounts of money, but it appears that, you know, basically the big expenses aren't going to come till next year. So maybe he'll be able to swing it. The other big, you know, headline for me is just the production numbers. I mean, we knew that they had made 5,000 in 1 week, but Tesla is sort of indicating that they've made this hit this number in multiple weeks, and they expect to get to 6,000 next week, at the end of this month. If they're able to do that, that would be impressive, and that would probably go a long way to addressing, you know, investor concerns.
We do know a little bit more about what the production issues actually were, that he went sort of overboard with the robots, had to put that production line inside the tent, humans working there, and the humans actually seem to be making the cars faster than the robots. But Ivan, you know, do you believe the 6,000 car a week target at this point?
I think it could be reachable. It seems like the 5,000 car a week target is now reachable, which does change everything because there's still a huge backlog of demand for the car, and a lot of people who would like to order the car but have concerns about the ability of getting the car. As production increases, I think you could see more orders for the car, and it also does change the cash flow, and it also just, the more cars they produce, it does put them in a better position to negotiate with their vendors.
Now, all of this as this trade war tiff continues to escalate. Now we have new reporting that the Trump administration is considering actually raising tariffs on the initial $200 billion worth of goods from 10 to 25%. Tesla has also indicated in this report that the tariffs are hurting them in China, saying in the letter today, their shareholder letter, while tariffs on vehicle imports to China have recently decreased to 15%, imports specifically from the U.S. have increased to 40%. As a result, we had to adjust pricing in China in order to partially offset this increased cost, and this will likely have some negative impact on our volumes in China in the near term. Max, translate.
Yeah, so Tesla, you know, China is a very important market for electric cars generally. Tesla has not been huge in China to date. They've been sort of talking recently in the last couple of weeks or months about building a factory there, which could be could be huge for them. Right now, it's not a huge part of their business, so I don't think the tariff issue is going to be impacting them in a big way. That said, you know, anytime a company, especially a prominent company, is talking about making investments in China, and you have President Donald Trump, who is, you know, somewhat unpredictable, you know, that could create some uncertainty for investors.
Now, this factory, though, is also going to be really expensive, this new China factory, and Tesla's saying construction is expected to start there in the next few quarters. Ivan, is that a smart move given, all of the difficulties thus far and hitting the targets that they've set for themselves, or is that their only choice?
No, it's important that they build a factory in China. China at some point will be the world's largest car market. China is also going to be the largest car market for electric vehicles because they have a goal of being fully electric by 2030. So that is a huge opportunity for Tesla. But I think the majority of cars they are producing now are for the sale in the U.S. I mean, there's enough demand in the U.S. to fill a production run for a long time.
Meantime, Max, got to ask you which Elon we're going to be getting on the call. It's 20 minutes away, and he's tweeting seemingly unrelated tweets about applying to Tesla, though the earnings call is just about to start. He has been apologetic in recent days for times where he admitted to crossing the line. Do you think we're going to get a better behaved Elon today? I
would expect a happy warrior rather than the kind of pugnacious, jumpy guy we saw on the last earnings call. I think, the conversation about his tweets it's been very loud. Analysts are talking about it. It's definitely affecting investor sentiment. And I think the my expectation is that he'll take those things to heart. Also, Tesla had an okay quarter, so you sort of figure he's probably in a better mood. The interesting thing about this company is that Elon Musk, wears his heart on his sleeve to such an extent that I think people have a little bit more transparency into the results than with other companies, because in the days leading up to this, the tweets were pretty normal, which I think kind of suggested that the results would be pretty normal. So I would expect that to sort of continue for the next hour or two.
Ivan, on the last call, he called analyst questions boneheaded. He cut them off. I assume you don't want to hear that from Elon on the call today, but what do you want to hear from him?
Well, you want to hear that they're addressing a number of the issues. There would be hope that there's some clarity into future capital needs, because that is a big concern and a big level of uncertainty. I do believe they will have to and should raise capital. They need money to build the factory in China. They will need money to start to produce the semi-truck, which also has a lot of potential in my view. So if he could add some clarity to capital needs, I think the market and analysts would like that. And I agree with Max. He had a great quarter, so I think his demeanor will be a little bit better.
We shall see. Ivan Feinseth of Tigris Financial Partners, thanks so much for joining us. Max Chafkin, Bloomberg Business Week. Luckily, we have you for the hour to commentate. Well, Google is preparing to launch a censored version of its search engine in China that will block results Beijing considers sensitive. The company has been working on the project, codenamed Dragonfly, since the spring of 2017. This would be an about-face for Google, which largely withdrew from the country in 2010 when it refused to self-censor content. Coming up, cloud provider Akamai disappointed investors Tuesday with its third quarter forecast. Can it prevail as large customers like Apple and Amazon start cutting out the middleman? We're going to speak to CEO Tom Layton next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Akamai is in the business of securing the cloud for its customers and providing them video delivery solutions. And that business took a hit on Wall Street after reporting second quarter results falling as much as 7.7% on Wednesday. This after Akamai's forecast for the third quarter largely missed expectations. So Akamai CEO with me here in the studio. Now, the forecast is what missed. The quarter itself was fairly strong. Why do you think investors reacted this way?
Well, sort of a strange reaction. Sometimes that happens. Had a great second quarter, and we actually raised guidance for the year. So yeah, Q3 is often seasonally soft, and we signaled that, but for the fourth quarter looking very strong, and for the year very strong. Profits growing 34% year over year, so it's hard to be disappointed there. And our security business is booming.
So where do you think the pressure is coming from? You know, you have a lot of cloud providers out there now using their own content delivery networks. Are you seeing churn in some of your larger customers?
Actually, churn was a record low for us in the second quarter, doing very well there. Some of the cloud giants, very few, do deliver some of their own content. But our media business, which includes those companies, grew 8% in the quarter. So good performance with a very bright future.
So in what areas are you actually taking share? Security?
Oh, for sure. We're the market leaders in security. In the last few months, the leading analyst firms, Gartner, Forrester, IDC, all named us as the leader when it comes to stopping DDoS attacks for web app firewalls. So we're the largest provider there, and that business growing well over 30%, now a quarter of our revenue. So, doing very well.
Where else?
Well, we're gaining share in media. Our traffic the growth rate of the traffic has accelerated 4 quarters in a row, well beyond the internet traffic growth as a whole. That's led by video for over the top and also gaming. So we're obviously gaining share on the market there as well.
Video streaming is continuing to explode, and we're seeing more big players get into original content. How does that impact the trends that you see?
Well, I think that's great for our business anyway, because more people are watching more hours of their hours online and at higher quality levels. And higher quality means more bits need to be delivered to see a better picture. And that's a key reason why our traffic is growing so rapidly, and also revenue growing at a very good clip.
You highlighted M&A during the Analyst Day last month. Where are you interested in making acquisitions?
We're interested in a variety of areas. Obviously, security is interesting to us. We're growing so rapidly there. We have to be very judicious there because some of the valuations don't make sense. We're working hard to improve our margins, which means it's hard to buy a company because very few companies have our margins. So we're careful with what we buy, but we're actively looking in all the areas of our business. But of course, security is interesting to us.
You're sort of on the front lines, and we've been talking a lot about cybersecurity lately. We've been talking a lot about the threat from Russia, the threat in particular to our elections. Are you seeing anything in your network that's concerning?
Oh, I think cybersecurity is concerning overall. You have nation states, very powerful ones engaging, organized crime, a lot of investment in cyber attack, political hacktivism. This is a big deal, not just for the elections, which is a big deal, but just across the board. Account theft, taking people's money in their bank accounts. And so we've been doing a lot of development at Akamai, and we now have a product that is stopping fraud at banks, stopping people from taking over your bank account and draining your funds. And so we're making progress defending major enterprises against these cyber attacks.
Coming up on your 20th anniversary, the 20th anniversary of Akamai,
yes,
which is pretty significant. What's the next 20 years going to look like?
It's been an amazing 20 years. You see what's happened on the internet and what Akamai's done. I think the exciting times are really ahead. I think we're just at the beginning of what could happen on the internet. You look at the Internet of Things just at the beginning. You look at blockchain could revolutionize, the financial industry, how transactions are done. You look at the future for enterprises and how they manage security. We're entering an age of zero trust. And the old ways of defending your enterprise, your data, your apps, and your employees don't work anymore. And that's going to be a whole revolution ahead.
All right. We'll see you again in 20 years.
Thank you.
Both of us are still here.
Look forward to it.
Co-founder and CEO of Akamai. As always, great to have you here on the show.
Thank you.
Up next, Naked Labs has created a product that might know your body better than you do. We're going to take a look at how the company is bringing 3D scanning technology into the home. And we're standing by for Tesla's second quarter earnings call, set to begin in just under 15 minutes. We're going to see whether Elon Musk takes questions from analysts this quarter. As you know, last quarter's call got a bit rowdy. The stock is still up after hours off the results. This is Bloomberg. It goes way beyond a normal scale. The startup Naked Labs has now made a 3D body scanner with a full-length mirror that people can buy for their homes, the first of its kind. It delivers information on your body, things like weight, height, BMI, measurements. The company just raised $14 million, led by the venture capital firm Founders Fund, and Sion Bannister, one of the firm's more recent partners and an early Uber and SpaceX investor, joins us now here in the studio. Great to have you.
Yeah,
I've been wanting to have you on the show. So, is this something that you imagine everyone would have in their homes, like a scale, or is this a more niche kind of use case?
Originally, the goal is to have it in every home. To begin with, you know, it's going to be the person who buys a Peloton, who really cares a lot about personal fitness. And so the price point is higher to start off with.
Well, it's $1,300.
Right.
A scale is more like $20,
Right.
but okay.
So if you think of like televisions when they first started out, they were $23,000 for the flat screen TVs. You know, if you're a pioneer in the space and someone who's an early adopter, you're paying more, but eventually we can drive the price down with scale.
So how does the technology actually work?
Well, it has sensors that actually do depth reading, and so when you stand on the scale and you put your arms out, have you tried it?
I haven't tried it yet.
I highly recommend
I'll take
trying
one.
it. Yeah, highly recommend trying it. We'll try to hook you up with doing one. But you basically stand on a pedestal, the pedestal turns around, and then afterwards in about a minute, you get what looks like a Silver Surfer image of yourself. That's a flattened out image, and you're able to see a 3D model of yourself.
So talk to me about the potential here, the kinds of information that this can give you and how it might change your life or how you live it.
Well, you know, I think that we are scale obsessed, and we're obsessed with numbers that don't really ultimately matter for your health. So if you get on a scale and you're like, gosh, I'm 2 pounds heavier or 5 pounds heavier or 10 pounds heavier, but you're working out at the gym and you're making, you know, dietary changes, are those changes that actually really matter? And so when you actually get a 3D body scan, you can see what those life choices are actually, how they're impacting your body. Like sometimes when you work out, you're gaining weight. And so you might become discouraged if you just got on the scale every day.
What about the privacy issues here? I mean, we're so concerned, you know, especially in light of the Facebook data scandals, what companies know about it, about us, how they are using that data, if they're being honest about it, if they even know where our data has gone.
Yeah, you know, Naked Labs takes that very seriously, and that's one of the reasons why all of the scans are done on device. And then the only thing that
so it's stored there.
It's stored there on device, does not go back to the company. The only thing that you get back to the company is that little Silver Surfer image of yourself.
So you joined Founders Fund now a couple of years ago, and you were an angel investor before that. You backed Uber, you backed SpaceX. What do you think are the big mega trends right now?
Oh gosh. Well, I know what I'm personally passionate about. I don't know that I follow the market and try to figure out what the biggest trends are, but I'm personally very passionate about the future of entertainment. And so I've been doing a lot of investing in that area. And so I've been turning over rocks, and basically I don't know if you've heard of like Hatsune Miku, which is a virtual pop star, and she's a hologram. Billions of people watch her. But also there's little Michaela on Instagram. She's a virtual influencer. So I did a seed investment there. And so there's things that I'm like looking at and trying to figure out, okay, what is the next Pokemon Go? You know, how are we going to interface with our phones? How is augmented reality going to impact us? And so there's the things I'm really excited about.
You invested in Uber. Do you think scooters are the next big thing or not so big?
Personally, my personal opinion is no. But I do think they are necessary for certain people. Like people are really happy about them, and they're a cost-effective, affordable way to get around town.
Have to ask you about Elon, since you invested in SpaceX. It's Tesla earnings day. Founders Fund backed Tesla. You know, does it concern you at all that this is, you know, he's running 2 companies. He's got a lot of side projects. He's tweeting all the time, including right now, minutes before the earnings call. Does that concern you as an investor from an execution perspective?
Well, we're pretty bullish on Elon, as you know. We're very proud of everything that he's accomplished. And yes, it is a lot to take on, but I think that he's, you know, shown that he can do it. But, you know, I don't speak to Elon on a day-to-day basis, so I actually don't even know the breadth of everything he's doing.
What about Bitcoin? Founders Fund has made big bets on cryptocurrency, which is, you know, it's actually been an unusual turn for venture in general. Do you think that, are you still bullish, and do you expect to make more investments there given the volatility in the price? I mean, I know everyone's excited about blockchain, but let's talk about the value of the currency.
I think as a team we are still bullish. Personally, I'm also still bullish. So I hodl. I don't know if you know the term, but I hold on for dear life. As a store of value, I think it's incredibly valuable. It's basically digital gold. It's not the best way to transact. And so I think there's going to be other types of currencies that are good for that in different infrastructures, but it's good for store value.
So a lot was talked about when Peter Thiel backed Donald Trump and how that impacted others at the fund. And I'm curious if it's changed your experience at Founders Fund at all, if it's had a negative impact or changed the way that you guys do business or interact within the firm.
You know, I think it made us closer at the firm, mostly because we like to celebrate diversity of thought. And not everybody there agrees with everyone. You know, we have people, who voted for Bernie Sanders. We have people who voted for Trump. It's a very personal decision. And so it's one thing that we actually talk about a lot of things that have nothing to do with politics, like the future of the world and, like what sort of exciting things we could be investing in. And so politics has very little to do with what we do. But if anything, I think it made us stronger because we got to really know each other and collaborate with each other more. And, and we had to be pretty strong.
Have things changed since he moved to LA?
We see him more, actually.
Really?
So, yeah. So if you think about it, like his office was right next to ours. He could just walk over for an hour or so. Now he comes in and he's there for a full day or two. And so we actually see him in the office more as a result of him being in LA, which is great.
Now, here in San Francisco, we're seeing increasing anti-tech policies like bans on the scooters, limits on the commuter buses and things like that. I saw you tweeting about the promise of a Silicon Valley in the Midwest. Why stay in San Francisco at all? I mean, Peter's in LA. Could you see the firm moving elsewhere? Or do you see potential elsewhere, and if so, where?
I mean, it's always possible. We're not discussing it right now, but I do think that we have started looking outside of Silicon Valley for other possibilities. Like the next great company might not be in our backyard. And so we've looked at the Midwest. We're looking at Asia. We're looking all over the place. And so we are no longer location specific. So we're sector agnostic, location agnostic, stage agnostic. And so I think that's just, we're not going to stop investing here, and we're not going to stop being here in the foreseeable future.
Now, I'm very interested in diversity issues. I know you've spoken out on them before as well. You're a self-taught engineer and entrepreneur. What do you think is missing from the conversation about diversity in Silicon Valley?
Well, diversity is often sometimes things you don't see. It's sometimes not what's on the outside. It's like, for example, I identify as genderqueer. And by the way, thank you for asking about my pronouns. I think that was very inclusive and wonderful, so thank you. But I think a lot of the times when we're having these discussions, we don't realize there's neurological diversity. So sometimes people will say things like that person is dense or whatever, and they're on the spectrum. Mm-hmm. And there's things like that I think age diversity. These are certain things I don't feel like we're having a lot of conversations about that also matter.
Well, thank you so much for keeping that conversation going and moving it forward. Really appreciate having you here, Cyan Bannister of Founders Fund on Naked Labs.
Yeah, thanks.
All right, coming up, we're going to talk more about Tesla's second quarter results. The call about to start minutes from now. We'll discuss. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Back to the top story of the moment. Tesla shares spiked in after-hours trading after reporting second quarter results that, well, weren't terrible. Tesla lost about $3 a share. The street expected a loss of $2.90 and knew that it would be a tough quarter. However, Tesla's cash burn of $740 million was lower than the expected $900 million. And we can't ignore Model 3 production as it's going in the right direction, even meeting and beating targets. Production hit 5,000 cars a week multiple times in July, and Musk predicts 6,000 Model 3s a week by late August. The call is just beginning now. We are expecting Musk to jump on. Analysts want answers about capital, the pace of production, and of course, profit. We are standing by to bring you all the headlines from the call as they cross. Meantime, I want to bring in Tasha Keeney of ARK Investment and Bloomberg Business Week's Max Chafkin. So, Tasha, what's your headline takeaway here?
We're really excited for the call. I think we're very much looking forward to more news about this China factory. In the letter they said China is one of the largest markets for EVs, and that's true, but it's also the largest market for autonomous driving. And we think that's the largest market opportunity ahead of Tesla. It's a $10 trillion market globally in the next 10 years. So we're looking forward to that. We think they could raise some capital to support that, and we're okay with that because we just want them to get as many cars on the road as possible to build their network.
This as trade tensions continue to rise between the United States and China. In what direction they will go, we do not know. Max, you've been diving into the numbers for the last hour or so. What else do you see that we're not looking at?
Yeah, I mean, the big question for me, and that I don't think has been answered yet, we'll see what happens on the call, is demand. So we know that Tesla, based on what they're saying, that, you know, they haven't even tried to sell the cars, and they're selling them really well. We don't know what's happened with these hundreds of thousands of reservation holders. Some analysts had suggested the possibility that, you know, there were lots of cancellations. Tesla's kind of pushed back on that. But I think in the long run, that's going to be a big question. Like, how many people really want this car? You know, famously, electric cars are a very small percentage of the total auto market. You know, obviously Tesla thinks that that's going to grow, and there are a lot of reasons to think it'll grow, but it's unclear just how much and just how badly people want these things.
And in fact, Tasha, Goldman put out a note saying that they've seen interest decrease as availability and test drives have increased. Does that concern you?
You know, I think there's more than enough demand out there for the car. And I mean, we're seeing that in the sales, right? I mean, the Model 3 sales outpaced all mid-size premium sedans. And that's pretty amazing for a new car. So, you know, we're really not concerned on the demand side. And we've seen really great resale values from these vehicles as well. So if you look at a Model S, it sells for $75,000. 4 years later, it's worth $45,000. I mean, that's $10,000 more than a comparable BMW. So we think these cars are a great investment. You know, we think once they go autonomous, you can actually make money off of them. We're really not concerned from the demand side.
Still, Max, the bears, of course, are out there. David Einhorn shorting Tesla. Elon Musk not so happy about it. In fact, responded to a report from Bloomberg's TikTok saying to Einhorn specifically, tragic. We'll send Einhorn a box of short shorts to comfort him through this difficult time. As always, punchy.
I think this is the Elon that investors want to see, because, like I said, you know, he's a happy warrior. Yeah, he's punchy, but he's at least sort of rolling with it. Because in that report, Einhorn was complaining about the quality of his car and saying he wasn't going to cancel. He was going to cancel his lease. So the fact that Musk is sort of taking it as a joke, that's probably going to be seen as a good sign from investors.
Musk has opened the call with a number of other Tesla executives, thanking them for their, quote, mind-blowing performance over the last month, and confirms that they've been doing 7,000 total cars weekly into July. Tasha, obviously the numbers are moving in the right direction. Do you think that it's sustainable even without that tent and the human production line outside?
You know, I think Tesla's really working hard on that sustainability aspect of it. I think, you know, they said that they hit 5,000 multiple times. Of course, people are looking for that to be continuous. But, you know, to take a step back, I think there's a lot of undue focus on these production numbers. You know, people are really sort of missing this long-term story that Tesla's producing this unbelievable product that actually improves after you put it on the road. I mean, no other automaker is doing that right now. These cars improve overnight. You know, they gain value actually after you acquire them as a customer, and that's really the Tesla advantage, the software advantage, and that's not going away anytime soon. And that's why they're able to attract such talent, you know, because they have the star figure, Elon Musk.
Now, Max, as always, there are some strange stories happening on the sidelines, not the least of which is the story about Martin Tripp, a former Tesla employee, a supposedly disgruntled former Tesla employee who allegedly came into a Tesla call center with a weapon, but now there's no evidence that it actually happened. Can you explain what's going on here?
No, it's very hard to understand what's going on. There is, I'd say sort of the most important thing that's going on is that you have a potential or a whistleblower lawsuit. This guy, Martin Tripp, has alleged, you know, various misdeeds at the Tesla factory, and this may end up being litigated. The threat is sort of strange because it came in the context of basically Tesla kind of trying to clamp down on leakers and stuff. So it's sort of hard to tell how seriously anyone took it, particularly because it doesn't appear that the local police thought it was a real issue. So it's pretty hard to untangle.
Elon seemed to take it seriously because didn't he email the company about a threat?
Yeah, and it's hard to know there. Like he mentioned sabotage. I mean, you know, you could imagine like what is sabotage? Sabotage could be like actually sticking a wrench in the gears. Sabotage could also just be like leaking to the press, which at the moment it seems like that's the most likely thing that Martin Tripp actually did. Of course, he's going to say that's whistleblowing. So I don't know. It felt to me, just as an outsider, somebody who's followed the company, as a bit of sort of panicking on the part of Tesla. There's a lot of bad news. There are a lot of leaks coming out, and you know they're obviously trying to stop those. And so I don't know. I don't know how it's gonna shake out, but we'll see.
And on the call, Tasha, Elon saying in absence of force majeure, Tesla should produce 5,000 Model 3s every single week in the third quarter. Is that music to your ears?
Yeah, I mean, you know, we have confidence in Tesla. They've been working on the production line to sort of stabilize things. Of course, we know that they're increasing use of automation and sort of tweaking that to scale it to the exact level that they need. You know, Elon Musk has said that their main competitive advantage will be manufacturing. So clearly he's very focused on that. I mean, he's willing to sleep there to get it done. You know, and again, you know, I think apart from that, you know, we're really looking forward to Tesla just getting more cars on the road and acquiring this data advantage. And I really don't think enough people are talking about this. Tesla's collecting data off of customer cars, and that's what it's using to train its autonomous neural net. And this is really a competitive advantage that's not highlighted enough. So I hope to hear more on the call about updates to Autopilot and how that program is going.
Elon now talking on the call about how they see the Model 3 gaining market share against premium sedans. We're going to continue to listen to that call, Max. I know you're continuing to listen, and you'll be back with highlights. Tasha Keeney of ARK Investment, thanks so much for stopping by. Still ahead, Sprint and T-Mobile may be getting closer to a deal. Will the merger help them take on AT&T and Verizon? Coming up, we continue our coverage of Tesla's second quarter results. We'll bring you all the latest headlines coming out of the call. This is Bloomberg. Tesla's second quarter results, the call underway. Bloomberg's Abigail Doolittle has been listening in and joins us now. Abigail, bring us the very latest.
Well, it's a very upbeat call. CEO Elon Musk sounds very positive, very complimentary to his entire team. And if we take a look at the stock after hours, we see this big pop higher. Of course, lots of focus on that Model 3, that all-important Model 3, saying that they are on pace for 5,000 of those Model 3s to be produced each week. And if they get to 7,000, that's where they would see sustained profitability. I even heard him talk about 10,000 per week. That's where they really want to get. So profitability relatively soon seems to be one of the themes of this call. And interestingly, he also said that as they get more Model 3s out there, there could be a, quote, viral force there, that the customers are, in fact, their best salespeople. He said that he direct delivered one of these cars, a Model 3, to a customer on Sunday, and the customer had never even sat in it. So their goal is to also get some more of these Model 3s in showrooms for test drives. But overall, Emily, right now, a very orderly, upbeat conference call for Tesla.
All right, Abigail Doolittle in the newsroom for us. Thanks so much for breaking that down. Well, T-Mobile second quarter numbers are in, and they are ahead of the wireless pack when it comes to adding new customers. T-Mobile added 1 million subscribers in the quarter. Impressive when you consider the 4 major U.S. wireless subscribers added a total of 1.8 million in that very same time frame. That's including T-Mobile. Speaking on the investor call moments ago, T-Mobile CEO John Legere said they're still optimistic that their merger with Sprint will get approval. Here to tell us more from T-Mobile headquarters, Chief Operating Officer Mike Seaver. Mike, great to have you back here on the show. We'll get to the merger in a moment, but first let's talk about the quarter. I know you and John love those comparisons to the competition, though Sprint doesn't necessarily qualify as competition anymore. But walk us through the highlights.
Well, you know, this was just a blockbuster quarter for us, another one. This was an all-time record quarter on service revenues, on EBITDA, and we delivered 686,000 postpaid phone nets, which was actually the amount that if you took the entire rest of the industry and doubled it, that'd be what you get. And that, by the way, includes the performance by Comcast, who's now the #2 player in the market. We also delivered the lowest churn in our company's history, smashing through that 1.0 barrier with an overall postpaid phone churn of 0.95, which is something our team should be incredibly proud of because it speaks to the power of the network that we're delivering to consumers.
Okay, so talk to us about the regulatory process and how that's going with Sprint. Any word on the divestitures that need to be made?
Well, we announced this 3 months ago, almost to the day, and we said then this is a pro-consumer, pro-competitive deal, and we were optimistic that when we had a chance to tell our story about that the government would agree. And since then, we've done a lot of work. We've met with every major branch of government, the Department of Justice, the FCC, with CFIUS, who looks over foreign ownership. John and Marcelo had a chance to testify before the Senate, and we found that people are willing to listen to our story, that the story is based on facts, and it's rooted in the opportunity to build an unprecedented network that the country can't have unless we bring these companies together, and that ultimately that's going to be what creates a new level of competition in the marketplace. When we're able to put a network together that has 7 times the capacity of our current combined networks, we're going to bring competition to AT&T and Verizon and Comcast like they've never seen before.
So what kind of feedback have you gotten on the types of divestitures that need to be made?
Well, that's not a discussion that we're having. Maybe there will be a time for that. But our view is that this deal, as it's currently structured, is pro-consumer and pro-competition. And we're finding a government that's willing to listen to that story. And that's really important. So we're out there working very hard. And we think that when they see the facts and they see the data, they're going to realize that this is a deal that's pro-consumer and pro-competition.
So everyone is doing a live online TV service, including now T-Mobile, this along with Dish, AT&T, Google, Hulu. What makes yours different?
Well, we're planning to launch our service later in the year. And, this is a TV service is something, this is a market that if ever there was one that needed to be uncarriered, it's this one. People love their TVs, but they hate the companies that bring them their TV service. They're outdated. They're not connected to your social media life. They're not connected to your mobile phones or your other technology. We're going to solve those things. And I'll tell you what's interesting is when we come together with Sprint and create the new T-Mobile, we will have a 5G network that not only will be able to bring TV service into your home, but will bring real competition to broadband in your home for the first time. And man, that is a market that needs competition like no other.
I'm curious what video service your customers stream the most and what that sort of tells you about home versus mobile viewing.
Well, it's Netflix and YouTube and Netflix. Those are the most popular services on our network. They take up a huge part of our overall usage and capacity. Part of that, though, is because we give Netflix away to our customers as part of T-Mobile One. It's been a huge part of the value proposition. Customers love that. And it's one of the reasons why our churn is rapidly falling.
Now, talking about 5G, Nokia will be supplying your 5G network gear, a deal $3.5 billion. Where will you be offering your first mobile 5G service?
Well, that deal, we were so proud to announce it. It's the biggest 5G deal that's been announced globally. And it shows how serious we are about rolling out 5G. We're rolling it out everywhere. We'll be national by 2020. But 30 cities come this year, and not sporadic little parts of cities like AT&T and Verizon are doing with their millimeter wave strategy, but all of big cities, because that's the benefit of low-band spectrum. We can bring 5G nationwide. Once you add Sprint in with the new T-Mobile, we can go not just nationwide, but we can go deep and create the kind of transformational experiences like we've talked about. We will have 3 years after bringing the company together with Sprint, an average experience that's 5 times faster than Americans experience today on their mobile phones, just in 3 years. It shows the power of the synergistic assets of these two companies.
Now, T-Mobile came in very aggressive with pricing when John took over the company. But overall, wireless prices in general haven't come down in a long time. Do you think that that will continue? Will prices just continue to go up?
Well, what you get for what you pay continues to come down. You continue to get more and more and more for what you pay. What's happening is customers are deepening their relationships with us. And so we're able to maintain relatively stable ARPU, not because our prices aren't coming down, but because we're attracting customers who expect more from us and want more from us. They're buying unlimited now versus data packages, and that's one of the reasons why ARPU's been stable, even though you get way more for what you pay than ever before. In fact, you get 10 times more per dollar spent with Metro PCS today, 5 years after we came together with them, than you did before we came together.
All right. T-Mobile Chief Operating Officer Mike Sievert, thanks so much for stopping by and breaking it down. Well, we're still on Tesla's upbeat second quarter earnings call. Elon Musk has been fairly well behaved. He's touting dramatic assembly line improvements and just asked key leaders of the Autopilot team to introduce themselves on the call. Excited that Autopilot and self-driving chip technology, he says, is finally coming to fruition. He says, I'm super excited. It's like, damn, some really good people working at Tesla talking about what it's like to work at the company. We're staying on that call next. This is Bloomberg. Tesla's second quarter earnings call still underway. Elon Musk just speaking about Model 3 production. Take a listen.
We're able to do this on a sustained basis, and we expect to, in the absence of a force majeure or some very, very unexpected event, be able to achieve an average of 5,000 Model 3s or above for Q3 and 2,000 Model SXs or above per week for Q3 as well.
Let's go now once again to Bloomberg's Abigail Doolittle, who's been listening in. Abigail, Elon Musk going to great lengths to introduce his team, presumably to emphasize the bench that he has at Tesla. What's the latest?
You're right about that, Emily. The overall tone of this conference call, this earnings call, super positive. And of course, if we contrast that with the first quarter call, that March quarter, there were some fireworks between CEO Elon Musk and street analysts. We haven't gotten to that part of the call yet, but so far, very, very positive with CEO Elon Musk, very complimentary of his entire team as he was introducing his Autopilot team. So that's a big takeaway of this call right now. Some were expecting that perhaps there could be some more fireworks from this call. Another takeaway would be to think that CEO Elon Musk would be exactly as he is, optimistic, upbeat, the visionary that so many on the street see him to be. And that is the role that we are seeing and hearing right now, especially as he does talk about the company being on target to produce 5,000 of those Model 3s per week, soon to be at the 7,000 rate. And once they achieve 7,000 Model 3s produced each week, that will equal sustainable profitability, of course, unless there is some sort of a recession or some other negative shock type event. But overall, Emily, a very upbeat earnings call.
All right, Abigail Doolittle for us in the newsroom. Thanks so much. Abigail, I want to get to Bloomberg Business Week's Max Chafkin, who's also been listening in. And Max, you know, on a broader point, we're seeing strong earnings here from Tesla. It's not your typical sort of tech titan, but with yesterday's report from Apple, that was strong, and today a strong report from Tesla. How do you think this is going to impact the broader market, you know, given that we've seen concerns about Facebook, Twitter, Intel on the back of their disappointing results?
Yeah, it's hard to know. I mean, I think when Facebook stock, you know, tanked, you know, it kind of felt like, oh, well, maybe this is the beginning of some kind of tech recession or something. But of course, Apple had a great day today. Tesla is having a, you know, a pretty good stock performance in after-hours trading, despite, you know, missing its earnings per share estimates. So I don't know. I mean, it feels positive, but it's hard to say because the story with a company like Facebook has been so different from, you know, the story that's going on with Apple.
Well, so far, Musk has been incredibly well behaved on this call, Max, even apologizing to the analyst Tony Sacconaghi, who is the one that he cut off the last time. Tony now asking a question. What do you make of it?
I mean, I think you have to look at that, first of all, as, you know, this is a positive development, probably just on a human-to-human perspective. He gave this analyst who he had criticized as boneheaded the first question. That just seems like a positive development, you know, aside from any, you know, investor concerns. I think it also probably feels good to investors just because it speaks to, you know, Musk's, you know, overall mood. If he's not feeling threatened or whatever, he's being a little bit more gracious. That feels good. I also think that, you know, you have to look at Tesla as having done a pretty good job with the expectations game here, because, you know, this was like they missed their estimate, and despite that, the stock, you know, has gone up quite a bit, and I think that's partly because for the past few weeks, basically Tesla has, you know, conveyed to investors and to the public that it was having a hard time, and I think that now investors had kind of, you know, were sort of prepared for the worst, and they got something that was merely okay, and they're feeling pretty good.
Specifically apologized for being impolite and blamed it on insufficient sleep. So maybe too much time in that sleeping bag on the production line, Max. What does Musk have to prove this coming quarter?
I mean, I think if they can do what he says, if they can make 5,000 cars a week, that would be really, really good. I mean, you just mentioned the lack of sleep. You know, Tesla did everything they possibly could to hit that 5,000 number. You know, it was clearly, you know, running the company ragged in all sorts of ways. You had this tent in the parking lot, you know, and they managed to get there. And if they're able to stay there sustainably with Elon getting enough sleep and the company sort of firing on all cylinders, that'll be really good for investors and for the company.
And we will be monitoring every step of the way along with you. Bloomberg Business Week's Max Chapkin, as always, thanks so much. Tesla earnings coverage from us not stopping. Stay tuned right here on Bloomberg Television for more coverage in Asia. This is Bloomberg.